Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, October 31st, 2025. S&P 500 currently sitting at 6832. I'm David Zarling. I'm here with Ian McMillan. Today is Halloween, also Reformation. We got scary markets on our hands. What do we want to cover today?
Yeah, market's a little weird. I mean, we're going to have a new likely all-time weekly closing high.
It's not bad.
Not bad. As a trend follower, can't complain. Would say the orange flags continue to. I don't know. I don't know if we're getting rid of orange flags. If we're adding orange flags, I would say the list of stocks to choose from continues to dwindle.
There's definitely a split out there. You know, on the one hand, you still have semiconductors and tech strong.
Those matter a lot more.
They do.
Than all the others. So,
and then you've got some split earnings price reactions, right? We could care less about the earnings themselves. It's what's the price reaction to those earnings. And we had Microsoft, Amazon, Facebook, and Apple report this week, among many others.
Yeah, what did those? Apple, they're kind of a mixed bag, weren't they?
It's the split between positive reactions out of something like Apple and Amazon and not such great reactions out of Facebook and Microsoft.
Yeah, Apple will be interesting. It's back to, we'll see what they do with this. I mean, it's a good chart. Apple is a good chart. If this ends up being, no, it's not. It's still green. But if it was to be some like bearish engulfing, that's not going to kill the chart. Mixed bag from the mags. What was it? Was it last week Netflix got hit?
Yeah.
Trying to save that one, but we'll
trying to hold its 200-day.
Yeah.
But you have Amazon going out to new all-time highs, Microsoft failing at the highs, Facebook trying to hold on to a 200-day, Apple new all-time highs. And then you have like a super trending stock like Pfizer just completely crap the bed. Now, before earnings, I should qualify what I am saying. It was trending until March of this year. So it's not like you get to say, oh, this week was a real big surprise in Pfizer. It had already been in a downtrend since March and had declined already about 45% going into that.
Yeah, I would assume Pfizer's going to take another leg down. I mean, biotech looks pretty good.
We had October 29th this week, which you record, you're positive at the index level while recording a fair amount of 52-week lows.
Definitely a week to be cap weighted.
Right.
Definitely a week to be in the mega caps, mags, like you said, semiconductors. I mean, NVIDIA's a mega cap.
The mega cap.
All that stuff. Growth over value.
Growth over value, high beta over low vol. But it's interesting that on October 29th, almost 9% of S&P 500 stocks were at 52-week lows.
Well, and I think you're down to like 130 of the 500 or whatever it is. It's 495 or 504. So let's say 130 of the 500. So what's that? Like 26% are above a relative 200-day. So that was kind of what I was mentioning earlier. I mean, that number right there, the number of stocks to participate in, probably a lot more are in uptrends. Absolute uptrends. But as far as things outperforming, just gets worse and worse every week. And then again, so it's like, okay, we just might as well be cap weighted. Might as well just be in all this super big stuff. Like we were saying before we hopped on here, it's a lot more fun when you're coming off the lows, man. You get back over that 200-day and you're like, holy cow, we could have like 6 months of bull market.
Yeah, when you have just that.
Now we're 6 months in.
You got that broadening out. And so a lot of stocks are working. I think that's a fair point to make. And I think the NYSE, the NYA, representing the NYSE is kind of it's kind of capturing that sentiment, which is it's kind of a split market. You have on the one hand the Nasdaq 100 making and mega caps making new all-time highs. On the other hand, New York Stock Exchange did not. So it's kind of a divergence. At the same time, you can also look at like Russell 1000 equally weighted or small caps, and they're consolidating right at the prior highs, which is perfectly normal to see that. But, when you look at 476 stocks hitting 52-week highs while 170 in the NYSE are hitting 52-week lows, which triggers an ominous Hindenburg omen, which is probably overused and misunderstood signal. It has a ominous Halloween-y type name to it, but it's not a guarantee. It's more of just kind of a acknowledgement that we have a split market.
Yeah. What is the Hindenburg omen? That sounds terrible.
Yeah, I think the simplest way to think about it is just a split market. When you have extremes of one section of stocks moving higher and another moving lower without getting into like the big formula on it, and there's a lot of debate about it as far as how you're calculating it. And it has a decent, I don't know if you want to call it success rate. I don't like using that term, but that's all I can think of right now. But, a lot of times it does precede corrective behavior, but it typically, you see it in clusters. Last time we saw it was before the 22-23 correction, but it doesn't mean it has to happen. It's more about just potential bearish bias than a guarantee of a correction. It just means we have a split market. We've got some stocks moving up and some stocks moving down. Shocking.
It's probably a lot less shocking than we make it out to be, isn't it? You're right. Getting these periods, and what was it? I guess it was 2021. That was the big mega cap year. A big mega cap year.
Yeah, especially the second half of the year.
When everything else was going sideways, fizzled out. Yeah, I think that's what started. Was that the year that all the Mag 7 talk started?
Yep, that's exactly right. So, it can last for months, and mega caps can carry the market higher. That's like anything else in life. When your superstars are leading the way, you have splits in sports too. Some teams are winning, some teams are losing. That's how it goes. But Hindenburg is just measuring that extreme, and we have an extreme right now.
But I think an extreme.
I think Frank Capillari highlighted a really good fact about this split is with the spike in 52-week lows, more than half of them were from REITs and staples. So conservative, like defensive equities. So we'll see. I guess an example of another way to say it is S&P 500 is going to be up somewhere around 2% this month, but only 200 stocks in the index are up. But isn't that what makes an index is just an average? Like if you want average, you invest in the index because you're going to have some stocks
right.
Up,
and so if you gave
down.
me the list of, you said only 200. I bet most of those are in tech,
which is bullish behavior.
What do you think about Bitcoin?
Bitcoin,
kind of blah, man.
Got some work to do. Still trying to reclaim its absolute 200-day, and so far not doing it. And
it's not very bullish of you, Bitcoin.
Yeah.
Now it isn't still very strong uptrend. I guess the 200-day is still sloping up.
But it goes back to the old adage, nothing good happens below a 200-day. Do you really need to be involved in something below a 200-day moving average? Probably not. We can wait for crypto, whether it's Bitcoin. I think Ethereum needs to hold this 3,800 level. XRP or Ripple also below its absolute 200-day. That 200-day is flattening out, so you can expect messy price action there. So still some work to do. And when you look at what the dollar's doing, I think there's some clues there that if we get back above 100 on DXY, the trade weighted dollar, is that going to provide difficulty to crypto and maybe even gold and gold miners? We'll see. but as strong of a summer and early fall that material stocks like gold miners and uranium miners and things like that might have to pause for now while the dollar's doing this. We'll see.
Strong dollar. Maybe that's why stocks are down.
Well, and if
Or up. They're not even down.
And that's telling.
I mean,
too.
a lot of them are, but as I say stocks, I talk about the S&P. Yeah, I don't know. And you could always make an argument either way. Like if someone told me stocks were down, I could be like, yes and no. Like I agree with that statement, and that statement's it's clearly not right.
Right. There's a lot of stocks that are, but there's also a lot of stocks that are not. And that's why
we should just be in the index.
Yeah. Or the
Which
areas
is fair.
of strength.
There are times when you should be in the index.
In the index, or tilted towards a slice of the loaf that's leading, whether it's a sector or whether it's the large caps, those type of things. But there is some orange red flags out there that we've highlighted the past few episodes. The split market. You also have the VIX still making higher lows while the S&P is making higher highs, so that's still out there.
Yeah, big day for the VIX today.
But then you look at like the S&P, the index has been above its 50-day moving average for 125 trading days. That's a type of momentum measurement. That's not a negative. And then you look across the board. You mentioned semis, semiconductors, technology. Then you look at like emerging markets, biotech.
Yeah, emerging markets look so much better than foreign developed.
Mm-hmm.
Today's a rough day, but it's not China. It's not China. China's not that great. China's below a relative 200-day if you're using FXI.
And then you look at what high beta versus low vol is doing. You look at the NASDAQ 100 versus small caps. CCC credit spreads are still cooling. And this split market is taking place in October, right? We've known that October volatility is real. That can be a month where it's a chance to get in before the rest of the year, because we are entering November, which is one of the strongest months seasonally speaking. And Q4 as a whole is up 80% of the time and averaging about 4%. So it's the best seasonal quarter of the year. I'm not saying it has to go up. I'm not saying November and December have to be up. And if they're not, that would be a huge clue. That probably means that this split market that we're seeing underneath the surface is going to have some ramifications, and large caps are going to move down and correct towards the breadth underneath. But you could also see a scenario where next week, all of a sudden, you're seeing strong rotation into these beaten up stocks, and you get expansion going into the end of the year. So it's kind of an inflection point with the split market. Do we match seasonality going to the end of the year? I mean, I think you got to tilt towards yes, right? We're in an uptrend, broadly speaking. Yes, the large cap stocks are leading, but that's what they do. I mean, it's more weird when Pat Mahomes doesn't perform well than when he is. I mean, that's the trend.
That's when people really start to freak out.
Right. And rightfully so. If large caps aren't going to carry the water, well, then that's a problem. But it's perfectly normal when they do. And so do we see a broadening out going into the last 2 months of the year? Or do we see a catching down and we buck seasonality, like we don't match the seasonal tendencies, which actually would be pretty detrimental to the 2026 case as far as what stocks do. But right now, the trend is your friend. So you got to be involved with the broad trend.
I will say this hurts, Dave. One area of the market, if you want to call it that is kind of losing some steam, losing some momentum, you could say, are the momentum strategies.
Yeah, momentum stocks. You look at like
SPMO,
MTUM, especially on a relative basis, losing a little bit of luster. And that ebbs and flows, right? There's times where the market has momentum and times where it doesn't. Perfectly normal behavior.
And over the long run, right? Like over the long run, because that's what we're in this for. That's what our clients are in this for. Over the long run, you gotta, and I believe that the momentum pans out. You should definitely go through these periods where, and maybe that's a sign. Maybe that's a sign Even the and that's right. And those two ETFs you mentioned, SPMM, MTUM, very strong performers. Momentum in general, very strong performer over the last. I would say always, honestly, but certainly off the lows. If we go back to early April. So is that just another sign that we are kind of slowly losing participation under the surface? Maybe.
But momentum is the most prevalent factor in markets. In fact, it makes sense at this time to highlight a strategy, an ETF that uses momentum to its advantage in uptrends, and that's the Adaptive Select ETF, which is listed on the New York Stock Exchange under ticker ADPV, which it helps investors access to the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. And I think that's a fair point, that we're seeing momentum wane, and it's not like momentum moves in a straight line, and that's okay. So we have a split market, and as we've highlighted I feel like the past 4 weeks, since we've seen this breadth deterioration, is just resolves in one or two ways. The breadth stops deteriorating and the market broadens out and all stocks start moving up together, or the ones that have been leading catch down to the negative breadth underneath the surface, and we do get some type of correction. When you think about November and you think about Q4 and some of the other things that we're highlighting, like emerging markets and biotech and semiconductors and technology overall, high beta versus low vol, at this time you kind of have to err on the trend that you're going to see a broadening out of stocks heading into the last 2 months of the year. And if that doesn't happen, yeah, there's likely a decent correction.
That's what makes it tough, man. That's what makes it tough. They don't play the stock market on paper. You got to go out there, put some money on the table.
Yep, most competitive arena on the planet. How about commodities? I know we've talked equities, a little bit about crypto,
yeah.
international.
Commodities, pretty weak. Well, depends. Depends, right?
Adult diapers, depends. And you're just saying that it depends on what you're looking at.
Honestly, of all the precious metals, I feel like palladiums. Precious metals has definitely gotten hit. They're getting hit again today. Now, this has been such a strong uptrend that this could be a very, very normal correction.
Gold is still above its 50-day moving average, which is rising. Still above a 200-day moving average, which is rising.
I think that the long-term trend in gold and gold miners and all that stuff is still up. Now, where do you find a bottom in here? I have it, or if it is a bottom, where is it in here? I have no clue. I don't. It's a strong uptrend, so you've got to err on the side that it continues at some point. But I'm not sure how deep the pullback is here.
Still, we've highlighted in the past some opportunity risk there, but counter trends of the major trend are normal. You could see gold perking up here and finishing the year strong. Time will tell.
Energy's been terrible.
Yeah, energy's been discounted. It's been in an absolute range for 4 years. When you look at something like XLE or even some of its largest participants like ExxonMobil.
Crude oil itself has been a sideways range since February 2022. We were seeing it $60. We've been back and forth between basically $50 and $75 for coming up on 4 years. It was pretty good, right? In the grand scheme of things, I don't think you want big, massive moves when you're going to the pump. But yeah, certainly has been not a great period for energy stocks.
Yeah, one of the weaker areas of the market. What about fixed income and bond space? Anything there?
I didn't know till yesterday that there was that they lowered rates.
Yeah, I guess I got a text from a friend talking about rates. That's how I knew. I guess Jerry was out there talking about rates and they cut them. That's fine.
I don't know. Rates are up since then.
Yeah, isn't that funny? You cut rates, but the bond market's doing its own thing.
Interest rates got pretty high yesterday. So we'll see. They're up again today. I mean, still an uptrend below. Rates. Kind of think we said. I think if you get below 4% on the 30-year, then okay, we're probably in a long-term downtrend, multi-year downtrend, I assume. But that wouldn't happen. I mean, maybe that happens at some point. I don't know. I don't know. Hasn't happened yet, though. Or maybe rates just stabilize. Maybe
rates have been in a range since
that's true
for a while, and that no rate of change for rates can be a productive thing. So we'll see. And we're still well off.
Gets rid of a lot of uncertainty if you're a business.
And we're still well off the flush lows from COVID in rates. I mean, we've gone from rates, 30-year rate or 10-year rates at 0.5 to now at 4.
Can you believe that? There were people out there. People were getting loans at 0.5% plus LIBOR or something.
Yeah, plus their margin.
Yeah, some spread, but 2%, 3%. I mean, yeah. Look, people were getting mortgages for 2.6.
So we'll see. I mean, I think until this range picks a direction in rates, we don't really know anything. The top of the range in the 10-year being near 4.8, the bottom of it being near 3.8. Until we see this range broken in one direction or the other, rates in essence remain unchanged, regardless if some dude named Jerry shows up on your TV. And so it just remains that we have a split market, fair amount of stocks hitting 52-week highs, fair amount of stocks hitting 52-week lows. That gives us our average. More participation out of those 52-week highs from your large cap, mega cap, tech, and growth areas. I mean, you even have look at discretionary versus staples. RSPD versus RSPS on an equal weight. So that's taking Amazon out of the cap weighted part of that. Going out, trying to go out at new all-time highs. That's risk on. I think I'd be a little bit more concerned if we were seeing ratios discretionary versus staples breaking down, triple C credit spreads moving higher, high beta, low vol failing. I'd be a lot more concerned. I'm not saying I'm not concerned. I'm just saying I'd be a lot more concerned if those things were happening and they're not. But again, we get to find out next month in November.
We got to wait another month. Come on.
Yeah.
And then what? We get new data and I'm just supposed to change my opinion?
Yeah, you are. Sign of strength, man. If you have an open mind and can change your opinion, sign of strength. When new data comes in, change your mind. Speaking of changing minds, did your kids go with their original Halloween costumes or do they switch it up?
Little one is Spider-Man, although I don't think he likes the idea of costumes.
Okay.
So he has a Spider-Man costume. Well, I take that back. He doesn't like the Spider-Man costume. I don't think he likes things with masks. Not that he has to wear the mask, because we made sure to get one where the mask is separate. But that hasn't been jiving. We've been trying for a couple weeks to get him in said Spider-Man costume. He's not a fan. Looks like we are going to do a hand-me-down fireman costume.
Okay.
From his brother, because he loves that one. And then Connor's going to be Shredder from Ninja Turtles.
Oh, man.
Yeah.
That's legit.
He likes picking the villains.
Okay.
I don't know what that says, but he was Venom. Maybe it's only the second time he's been a villain. He likes villains.
That's great. Well, enjoy it, because pretty soon that time ends. My youngest is a 14-year-old, and he's pretty much past the costume.
Yeah, I was going to say, you don't get to... Now, will they hand out candy, or are they out doing, teenager stuff now? On Halloween?
Well, I got a couple things here. The trick-or-treat in our community was this last Sunday.
Okay.
And we were gone celebrating my mom's 80th birthday.
Congratulations.
But it had me thinking about, when did it change? Because when I was a kid, Today was the day. It was always October 31st.
Always
There was no
the day.
It was the day. It was no like, oh, we're gonna pick.
Didn't matter if it was Sunday. Didn't matter if it was Wednesday.
Yeah, you manned up. You got out there with your candy bag.
Yeah,
you trick or treated, and it was
and
at night.
And everyone did it.
And everyone did it, and it was on Halloween. It was on the 31st. I don't know when that changed. I don't know.
Well, and then they do a lot of the trunk or treating now.
Yeah, trunk or treating.
Churches do a lot of trunk or treating. Daycares. Quinn did trunk or treat at his daycare yesterday, and then we actually saw another one that was doing theirs. I'm with you. I mean, we got a lot of things in this country got to be fixed, Dave. And to be honest, that traditional Halloween, I think, is near the top of the list than a lot of people want to put it.
Yeah, and you got to deal with the good and the bad. The split market for Halloween too, right? You go to one house, they give out the big Hershey bar. You go to the next one, they give you an apple. Go to another house, they give you like a full bag of M&Ms. You go to another one, they give you a toothbrush. Risk reward, you got to deal with it all.
And then you can trade at the end.
I actually, the first time I ever heard of trunk or treat, I was like, wow, we got to figure it out. I thought I was just backing up my car, opening it with the trunk, and you pour the candy in, but I guess that's not what they do.
You got to decorate.
You got to decorate the trunk. Got to make the kid look cute. So I get it. But yeah, it's October's done. Only 2 more months to go for the year. I know that's a psychologically important time for people.
December 31st, January 1st time period matters for a lot of people.
Yep.
Matters to a lot of people. Yep,
agreed. Anything else you want to cover before we wrap this one up?
Yeah, I don't know. It is I think it's fair to say it's a tough market. Like, I mean, I thank my lucky stripes that for the most part, I'm a pretty damn pure trend follower. I get why people are a little weirded out. I get why it's not as fun 6.5 months into a bull rally as it is off the lows, right? I mean, it's way cooler when all your stocks are up 6% a day.
Yeah, when
so we'll see. And like you said, the Microsoft chart's weird. We'll see what they do with Apple. I mean, those are 2 big ones. Those are 2 such big ones. NVIDIA looks good.
Yeah, on one hand, NVIDIA looks good. On the other hand, Meta looks bad.
Yeah, and then Amazon looks good, and Microsoft looks bad. Google looks pretty good. Consumer or communication services as a whole is pretty blah. I don't even want to know what that would look like without Google doing what it's doing.
Mm-hmm.
It's terrible. It's a terrible sector. Kevin's going to come in on Monday and switch our workbooks, which I'm pretty stoked for.
You don't want communication services anymore?
I don't want utilities, communication services. You know, another one that's hard is S&P because everyone already does the best S&P stocks.
And if the list is getting narrower.
Exactly.
Yeah.
So then you just feel like it's the same stocks, but fewer and fewer. So we'll see. Again, all of these, right? We could be sitting here in 2 weeks and we're like, yep, all the red flags that we've talked about panned out. They haven't yet. So
it's kind of like a trick or treat out there. You got treats with mega caps holding up well, high beta, risk on areas of the market, and a little bit of a trick with some of the stuff going on underneath. And maybe Kevin's going to pull a trick on you. Maybe you just have to keep your workbooks.
That would be terrible.
Would be a trick. Well, I appreciate you doing this again with me, Ian. We always get positive comments to those that listen, and so we appreciate those that do listen. We ask you to share it on your platform of choice and give us a high ranking. It's always appreciated.
Have a great weekend, everyone.